Let's start this video off by saying that the global banking system is honestly mysterious. There are about 30,000 different banks around the globe, and they have extraordinary asset holdings. Here's a fact. Alone, the top 10 banks control almost 25 trillion US dollars. Not M, B, but a T. Although it can appear complicated today, the initial purpose of banking was to make life easier. Let's start with a story. Italy served as the hub of European trade in the 11th century. There was a currency shortage that prevented traders from all over the continent from exchanging their goods with one another. 7 different coin kinds were used by merchants in Pisa, who often exchanged money. The word bank, which is derived from the Italian word banco, which means bench, refers to this trading activity, which frequently actually took place on outdoor benches. People began to reflect on the risks associated with travel, fake currency, and the challenges associated with borrowing money. It was time for a new business strategy. Therefore, Genoese merchants created cashless payments, while home brokers began lending credit to business people. Bank networks exist throughout Europe, lending money to everyone, from the clergy to even European rulers. But what about right now? In a word, banks work in the field of risk management. This is a considered explanation of how it operates. People gain a fair bit of interest while keeping their money in banks, and with this money, the bank makes loans at significantly higher interest rates. Because some of the lenders would miss payments on their credit, it's a calculated risk, because it offers resources for consumers to purchase goods like homes, or for enterprises to grow and expand. This process is crucial to our economy. Banks convert wasted savings into money that the rest of society can use for various purposes. Banks also make money through taking savings deposits, issuing credit cards, exchanging currencies, providing custodial services, and buying and selling coins. The main issue with banks today is that many have strayed from their original position as suppliers of long-term financial goods in favor of quick profits that come with significantly more significant risks. Most big banks developed scarcely understandable economic structures to generate fast money during the financial boom. They traded on their own out of habit, earning their executives and traders millions in bonuses. This amounted to nothing more than gambling, which hurt entire economies and cultures. Like in the year of 2008, financial institutions, such as the Lehman Brothers, extended loans to virtually everyone wishing to purchase a home, placing the bank in a precarious situation. As a result, the housing market collapsed in the US and certain parts of Europe, which caused stock prices to drop and ultimately result in a global banking crisis and one of the biggest financial catastrophes in history. Just like that, hundreds of billions of dollars vanished. Millions of people lost many jobs and, of course, large sums of money. Most of the top banks in the world had to pay billions in fines, and the bankers were among the professions with the lowest levels of public trust. The US government and the European Union had to put together a massive bailout package to buy troubled assets and prevent the banks from going bankrupt. How's that for a slice of irony? New rules were implemented to regulate the banking industry, and banks were required to save emergency capital from withstanding shocks and future financial crises. The financial lobby, however, was successful in stopping other stringent new laws. Different funding strategies are very quickly gaining ground, like modern investment banks, which have an annual fee and no sales commissions, giving them an incentive to operate in their clients' best interests, or credit unions, Cooperative projects started in the 19th century to avoid credit sharks. In a word, they offer the same financial services as banks, but put more emphasis on creating shared value rather than maximizing their profit. The self-stated objective is to assist members in creating opportunities such as launching small enterprises, growing farms, or constructing homes for families while investing in communities. They are governed by their members who democratically choose the board of directors. Credit union systems differ significantly worldwide, ranging from organizations with a few hundred members to those with several billion US dollars and hundreds of thousands of members. The emphasis on member benefits influences the level of risk credit unions are willing to assume. This explains why credit unions, despite being wounded, fared better during the recent financial crisis than traditional banks. Not to mention the recent growth in crowdfunding, but it also works for business. Many new technology companies started on Kickstarter or Indiegogo. Platforms emerged that enable people to acquire loans from vast groups of small investors, essentially eliminating the bank as the middleman. The person who provides the funding enjoys contributing to something more significant and can make investments in projects that they support and believe in, at the same time, distributing the risk widely enough to minimize the damage if the project fails. Microcredits are last but not most minor. Many tiny loans are made available to people, primarily in developing nations, to help them escape poverty. Those who previously struggled to get the capital required to launch a firm or a business weren't considered time-worthy. Giving out microcredits has grown into a multi-billion-dollar industry in the recent years. And while banking may not be your cup of tea, it is necessary for our current society for banks to provide capital to individuals and businesses to stimulate economic growth. But it is up to us to select who will do it and how it will be done in the future. So, there you have it. I hope that helped you think more clearly and that these facts were somewhat valuable. I sincerely hope this video was helpful to you, and I hope it helped you get an idea of the history of banking and how modern banking works in our current society. And of course, we'll be seeing you in our next future videos, so stay tuned. Also, don't forget to like, share, and subscribe if this video has taught you something new. We'll be seeing you next time. Goodbye for now.